Welcome to Cherry Beckert's GovCon podcast, where we discuss current government contracting trends, compliance matters, and best practices to guide federal contractors forward. My name is Eric Poppe. I'm a managing director with Cherry Bekaert as part of the Government Contract Services group. And with me is Jonathan Reid, part of our outsourcing team, who focuses primarily on government contractors. Jonathan is a director on the team. And Jonathan, thanks for joining us today.
Thanks, Eric. Appreciate it. Glad to be here.
I'm glad, this is now the second podcast that we've done focusing really on, accounting and considerations for government contractors. And I know that you work with a ton of different contractors, small, large, and really help them from an outsourced accounting perspective and lead that. So we wanted to have this discussion today around a topic that always pops up. And, it's sometimes not the most exciting topic, but it's something that it's very important, especially for government contractors, and that is around project cost considerations and project reporting considerations. Yeah. And the reason why we even decided to do this topic to begin with is, there's huge impacts, of course, from the compliance side and cost accounting, kind of my world. And, for contractors, especially as they get into more cost plus type work and flexibly priced contracts. But, it also has big impact on financial reporting and system setups and, helping, like your clients getting through their just monthly transactions, quarterly close, monthly financials, dealing with auditors. So, I was hoping that today we could kind of talk through three different areas of one being financial reporting, then compliance, and then a lot of the companies that work kind of on both sides of the fence of commercial and government. So with that, to jump right in, for companies that you work with, or if you were talking to a client that you were just onboarding and you're talking through project costing considerations, from a financial reporting perspective, is there anything that you would tell them specifically or walk through with them about?
Yeah, absolutely. I think that when we're, working with a newer client or even current clients that we have and they get a new contract, we really take some time to dig into what the number one compliance aspects of that contract are, but then have a more in-depth conversation on how they want to set up this project inside of their system that will, number one, make sure that they are answering any requirements of the contract from a invoicing and reporting standpoint, but also what the value to them is when it comes to setting up the project at either high level or a granular level. So a great example would be, the difference in receiving a contract with just one CLIN number, just one line item number that maybe is fixed price, where you're delivering professional services ratably over the period of performance on that contract. When I see something like that, I usually default to let's make this easy. We'll set this up inside of your system so that you are recognizing revenue, tracking costs against that one CLIN, especially if it's fixed price. We're delivering services and the customer is receiving the benefit evenly over the life of the contract. Let's make this easy. It'll be fixed price. We'll recognize revenue equally over the life of the contract. We'll record costs, labor, as they are incurred. Best method there would be percent complete, but sometimes we can utilize one of those practical expedients depending on the size of the contractor. On the flip side, let's say that we have a much larger, maybe it's a cost type contract. Maybe it's cost type contract with a fixed price or T&M component. That's where it gets very important to take a little bit of time to set up that project or contract appropriately inside of your system. Again, big things that I'm hitting are let's stay compliant. Let's make sure that the customer is going to be able to receive any of those invoicing or cost level details. But let's also make sure that we set up the project so that our clients get the most value. So if there are 20 different CLINs in this contract, maybe we need to set up each of those CLINs individually inside of the system so that we can recognize revenue appropriately and in a compliant manner for each of those CLINs, and so that we can track costs appropriately with each of those CLINs. So really for me, when I'm thinking about this, it all boils down to how are we going to set this contract up to answer those, main questions? Let's stay compliant, but let's also make sure that our clients are getting the most value out of this setup too.
Well, and you could have and situations where you have multiple CLINs that have different revenue recognition methods, because one is fixed price, one is cost plus, and so that's a huge impact right there too.
Yeah, absolutely. I mean, something that we see a lot is maybe there's one CLIN on there with a huge deliverable where you're not really transferring control of that asset to your customer until the end. So we want to make sure that we're not recognizing revenue if a couple of other things occur as well, till that deliverable is met. Where on the other side, maybe there's a T&M component where you're delivering labor services on a specific CLIN, where we want to make sure that we're recognizing revenue on that, billable hours times hours worked method.
Yeah, because that then would, that has not just revenue aspects to it, but that impacts tax items as well there, cash collections, everything else with there too.
For sure. I've even seen certain travel related or maybe ODC related CLINs on a contract that have some sort of burden. So things can get very complicated, and we want to make sure that we're accurately setting up our projects so that we can capture all of these different nuances.
Now, is there anything from a financial reporting perspective that you need to consider that relates to project setup from, if you're dealing with an auditor and helping them get through, a financial statement audit?
That's a great question. From an audit perspective, we want to make sure that we are, categorizing things in a consistent method. So let's say you're maybe a mid-sized, larger contractor with several different orgs. So you've got revenue streams captured separately on your financial reports. We want to make sure that we are setting up our projects and our new contracts in the appropriate manner so that those revenue and even cost items are captured correctly in those different organizations inside of your accounting system. So it's really a matter of taking that deep dive and identifying those key components that you not only want to capture so that you can make informed decisions based off of your financial data, but also so that your financial data has a certain amount of integrity to answer any questions that might come up from an auditor.
That's a good point. So now kind of switching gears a little bit, like let's think about this from a compliance perspective. So, of course, as part of having an approved accounting system, an adequate accounting system, there's a requirement there to be able to track costs to a contract level and to a CLIN level where specific. Yeah. Excuse me. Is there anything there that you want to hit on?
I think that we could even dial it back a little bit further, where it's critical to make sure that you have your cost structures set up correctly in your accounting system. So, if we're talking, the current topic, let's make sure that we're putting things in the right bucket. You also need to make sure that you are setting up those buckets correctly. So it's really just a matter of taking the time to make sure that these critical setup events and triggers are done correctly, because it can be very difficult if something is categorized incorrectly to go back and make those changes. It is oftentimes a time-intensive, labor-intensive correction to make. Whereas if you take the time to do it correctly in the beginning, put a little bit of effort up front, a lot of those issues can be avoided.
Well, and it's not just billable or contracts or billable projects that need to be potentially collected. It's also IR&D or bid and proposal or internal projects. Like if you're doing a system implementation internally, or, a lot of times I think we see it a lot on the M&A side, where companies, trying to acquire a couple targets, and, they get to create those cool names, project, dragon or unicorn. You can tell I have little kids and that we're in the unicorn and dragons and, fairy tale phase, but collecting those more indirect costs that you want to be able to identify out. And, and I think there too, this then bleeds into, well, what about JVs? And if you're a JV partner, and setting up a potential project for that JV, and how do you collect costs out either as support or as, if you're a subcontractor to the prime contractor at the JV, and how that flows in. Because a lot of that will impact even potentially consolidation, depending on ownership structure, and if it's equity method or full elimination entries. So there's kind of that nuance too.
Absolutely. I think that it's, especially when it comes to, first of all, setting up your indirect rates, make sure that you are setting up the appropriate number, amount, whatever you need in terms of full structure or indirect rate structure. It's all about making sure that you can record costs appropriately, set them up appropriately in the beginning, especially with the system implementation. Again, like I said earlier, all of these things can be avoided if you take the time to map out what your structure is going to look like in the beginning.
So, we've hit on financial reporting and dealing with potential financial auditors, and then also some revenue recognition items when it comes to the financial reporting. We hit on the compliance side of DCAA and their requirements and kind of the project costing piece. But, for us to end on, what about companies that, kind of are on both sides, that work in the commercial space and not dealing with the federal government, but also have government contracts. So, if you were talking to an IT company that did work with Apple, but they also sell something really cool that is way too, they're doing way smarter stuff than what you and I do, and they're also selling to the CIA, like, what would you tell them from your perspective on like project costing and the differences between pure commercial organization, non-government versus government?
I think there's always going to be a compliance aspect, even though it's a little bit more stringent with government contracts. We always have to follow GAAP, regardless of if it's commercial or government contract. So have a little bit more leeway. I think that it all really depends then on what value does specific levels of reporting provide that organization. So if you've got a commercial contract where you say, hey, I want to see one line item for revenue, I want to see one line item for direct costs, and then be able to separate out my indirects, we can set it up that way. If you want something more granular, maybe you have, I keep saying different organizations, but maybe you want to have that level of, reporting detail. We can always incorporate that so long as our structure is set up correctly. So at the basic level, maybe you just want to see on your income statement one line for your government revenue, one line for your commercial revenue. Or maybe you have different revenue streams under each your government contracting and commercial line items. So it really depends on the value that setting certain projects up at a more detailed level is going to provide to our clients.
Yeah, and I think a lot of the talking points that I usually bring up, you just hit, where you get to see at a more granular level the true, kind of the true cost for those commercial organizations. So it's more tedious and harder on the front end, but you do get to see the true, the true impact of that project. I feel like I talk to a lot of companies where they're like, hey, yeah, this is one of our most profitable programs, and it's with a commercial organization or a commercial customer. And then when you really look at it, and a lot of times I feel like these are actually fixed price. You're like, well, your margin is tiny, or it's actually at a loss, and it's actually being buffered by these other projects. So yeah, it just gives you that granularity there.
For sure.
So
even on top of your financial reporting, and these are all intertwined, but your project reporting, like you're saying as well. So being able to set things up at that level gives our clients an idea of where they stand on each project. And hey, maybe I messed up on my pricing and I need to consider factor X, Y, and Z next time when I'm pricing out a different job. It really depends on how we set things up. So with your indirect rates, maybe certain rates don't apply to certain projects. And you want to be able to see that inside of your financial system, but it
Yeah.
all depends on how you set it up.
It's a very good point. So with that, any closing thoughts on, project costing considerations for a company?
I think it's all about seeing the value and understanding that it does take a certain amount of, time investment to make sure that you are setting things up so that you can make those informed decisions.
Yeah. So really, what do you need from your reporting requirements? That could be compliance, that could be financial reporting, that could be stakeholders in the future, banks, and but John, thank you so much for joining me today on Jerry Beckett's GovCon podcast.
Absolutely. Thanks, Eric.
And thank you everyone for tuning in and listening. Make sure to follow and subscribe wherever you get your podcasts. And John, thank you, and have a great day, everyone.
Thank you.